Welcome to Trading Lounge and the Gold Report for Friday, October the 1st. This is a monthly chart here on US spot gold, and just going into indicator world, we can see that the monthly stochastics is moving down. We don't have that buying signal yet. So I suppose the time that the triangle pattern here that we're working on finishes, then we might get a crossover here for better or worse. It's just indicator land, and it's all good. So let's go to the weekly chart here. We're working just one pattern now. We're left with the triangle pattern. And in that we've got wave 3 here with an A, B, C, D and E. It's a descending triangle with an angled top and a flat bottom roughly. And we're looking at, from wave C here, we're looking at an A and a B and a C wave here for the D wave, and then an ABC for the E wave here, and then we'll push up at that point. And the push up will be up into group 1 only with 100, 200 and 300 here, because in terms of the market has reacted here at the level, so that means this is the arrival, the reaction and the first high above the level. So we're looking really, because we've reacted here, we're looking at a classic trading levels pattern. So basically we're in this correction here, so we're not quite finished it, and then we'll push up, which would be the first high above the level, into group 1, 1, 2 and 3, and then we'll have another correction that will probably pull back somewhere roughly the same as well at that point. There's always a possibility that I can be wrong, and in that case we would end up with something like that and pushing higher. But when it comes up to this point up the top here, I'll just say this: I would be wrong, let's just say, if the market just kept going, right? So I would only be, there's probably a couple of ways we could look at it, but I would need, for me to go past this number here, I would need to see a classic trading levels pattern sitting on that, right? I would need to see something like that. Then I would be convinced that we're leaving this number at that, as that crosses over at that point, because even when you get all up there and you get that pattern, you can still get that. So that must take that out there. So that's the only reason I would continue to say gold would go higher at that point, right? But otherwise we'd be looking for 5 waves in this structure as the first high above the level, and then another correction. I could be wrong, but that's what we'll do. And of course we will be long in here and all the rest of it. So, you know, we have to stay flexible on all of this. Let's go in and have a look at from C to D here in terms of the, well, this is a 2-day chart, nothing special about 2 days or so on. But in a nutshell, we've got wave C here and wave A here. We've been working wave B, and now we should be heading into wave C. Is there a case that we've got 5 waves down here? Possibly, but wave 4 here overlaps wave 1, so it kind of gives us that corrective ability at that point. So, yeah, obviously we're seeing gold stocks push down, and of course the ETFs would push down at that point as well. We can see US dollar moving up. We can see that everybody's hungry for US dollars. Crazy world as it is, they're all going for, and the bonds as well. So yeah, there can be further pressure on all of this. From here we'll just go to the 2-hour chart and then the tick chart and just nut this out a little bit. So we've been looking from wave A up here. From wave A we've been looking down. We've got well, an A and a B and a C here. We can't really call this wave 4 here because it comes up and overlaps wave 1 here, and the fact that it's come up so high, it really just helped us cement the point of the corrective pattern. And then what we did is we could have looked down here, we could have gone down here as an A and a B and a C as well here, but I'm a bit of a stickler, so I went the 1, the 2, the 3, the 4, and then I counted 5 waves down of 1, 2, 3, 4 and 5, called the low in here. We look for a setup to go long here at this point, so we'll need to go to the tick chart here for that, looking for a little classic trading levels pattern here with a 5-wave move here and then an ABC here and then going long above there. So we'll look at that on the tick chart, and we'll need to bring in some more data. It's 50 enough. From the A wave at the top there, we've been working it down as an ABC for the A wave, the B wave, and then down here as 1 and 2 and 3 and 4 and 1 and 2, and then we worked all the way down here for 3, across for 4, a little bit high but stayed with it, and then we looked for the last 5 waves down of 1, 2, 3, 4, and the 5th wave here with 5 waves in it. So all good. And then we looked for wave 1 here with an ABC back for wave 2 going along at this point, and we also had it down on this point because there's always a little classic trading levels pattern in there if you can be bothered to look at it, you know. So all we need to do is visually see it as support on that number, and you get the picture. But anyway, for the sake of it, it doesn't really matter. And so what we're looking for now is we need some evidence of an impulse wave. Now, obviously this is an impulse wave and it's got a bit of grunt to it, so that's good. But we still need an impulse wave, because that move up here could be an A wave, a B wave, and a C wave, and that's the end of it. So we need a little bit more evidence. We can lift the stop up to where it is there, the red line. That's under the, or I can even just drop that back down a little bit as well. What's 4, like that. And okay, I'll just put that there, leave that. Let's just move these into play. So obviously it looks like a third wave. Smells like a third wave. So then we need, I'll just need that over there a bit later. So with that said, I think that horizontal line there, let's just check. Maybe it's not, looks a bit weird. Yeah, 38.2% is low. I wonder where we got that from. So that's our little 38.2% retracement level for this, so we don't need that. We're pretty close to it there. Just get rid of this. And of course the wave 4 there, we're looking for a little ABC pattern, so we'll just pop that in there because we can use those again as well a little bit later. So a 3-wave move for the corrective pattern. So we can look at this as 1 and 2 and 3, ABC for 4 and down for 5 for 1, A and B. But B could be there as well. I have to double check that, but I'm just going to put that there and see if we can buy a little hope. Well, that's right on the 750, that thing, isn't it? So we don't need that. And then this looks like, that looks like an impulse wave to the upside, isn't it? I've got an extra wave there. We'll just see how we travel. If you wanted to add to this again, then the 55 here would be nice, and then so you can look to add anywhere on support here for that. But of course you're going into, where are we, at 1750 here, which is the midpoint, calling that in there, looking at this as wave 1 and 2. The next levels to the upside is 65, 72 and 80. Of course there's other important numbers in there, but let's just look at the bigger picture here for a moment. Because the extent, I mean, this could be wave 1 and 2 and 1 and 2 here. I doubt it, but so if we were looking for 5 to the upside, we can look at that. I don't think it's going to be very long, you know. It'll just take us into group 2 here somewhere. How does that look in the bigger picture? Let me just get my bearings here. Let's go back to the, let's just go back here for a second. Right, so that would be just blue. We're looking for 5 waves in this C wave here. So that's what we were looking for. And we could count sort of 3 waves up to there. So if we go up for 1 here and then come back for 2, and then we can look at 3 and 4 dancing across the 1800 there, but it's not going to let me do any more stuff. And then 1 more there. Okay, spit the dummy and clear that out. So yeah, we're looking for 5 waves. So coming back to that tick chart here for a moment, 100 ticks. just to get this into perspective, let's just get some more. Let's get rid of some data in here too. Things I don't need. So we don't need that. We don't need that. Some of these stuff. Don't need that. Don't really need those now. Do we need these? Nah. Oh, could use them a bit later. Okay, that's what we want there anyway, so we don't need one. Beautiful. So we can put that wave 1 up there now, and then back for wave 2. And so then we need to know this wave 2 over here. That could be handy over there. So this might reach up to the, you know, even though that we've got an extension in here, commodities have got a tendency to extend in the 5th wave rather than the 3rd wave. So but it looks sort of okay at this point. So we'll just take it to there. We don't need that. We knew that we'd be hitting a brick wall there. So from this low, let's just take it to the 80. That's going to leave that there. So that's kind of minimal stuff. So we could come back. I like that. We could come back to this area here for this. And we'll look for the A wave and the B wave and the C wave. So hopefully we'll get 5 waves here, right? 1, 2, 3, 4, 5, and then we'll get an ABC. So don't panic in that one. Any long trade here, you don't want to get stopped out. So we'll just move that out the way. And we'll look to add again over here for this. I mean, if you add anything in here, this run, just understand that you know, you're going to end up, you need to take it off the table once you get to 1772 at least. You know, we may be in that point there. So, but that's it. So, and the good news here is that if you see that 5 waves here, right, then because we've got 5 waves here in the opposite direction of the trend, it means we're going to get another 5 over here. And this 3rd wave should be longer and stronger than the first wave here. So to confirm all of this, which I think is looking good, we just need that 5th wave. But even before that, we can even get excited before that, because the B wave top here, if that's breached, then that makes that corrective, right? Because at the moment we could look down for 1, back for 2, down for 1, all that kind of stuff, but it looks like an impulsive wave here. So taking that B wave out, that's going to tell you that we're going to go up, we're going to have some sort of correction here. Maybe I've got that a little bit wrongish, and it always looks like a drunken man walking home when I check it the next day. The point being, we've got 5 waves here, then we'll get that 5 over here. So that's really exciting, because that 3rd wave there should be longer than this wave 1 here. And that will take us, as we just had a look at then, back at the daily chart. That took us, not the daily chart, that was the old irregular flat pattern that we're looking at, which I haven't updated, but I need to clean up. So this 3rd wave should take us well up into the 1800 area, and then we're going to be stuck here for a while. It's going to be laborious at this point. So Helen, if you're listening, if we get that 5 waves here, hopefully you've untaken the hedge off, then yeah, we don't want to be fallen back into this space here. So at the 18, we'll have to take some sort of action by taking some off at the table, and then we'll try to get the 5th wave top as well, and then we'll lock them up again. We'll lock those short. We'll lock it all up, or maybe we can even go, you know, more on the downside. Leave more open on the downside. Not a lot though. Not enough. Don't do it so much that it's going to sort of put any pressure on anything, you know. But we could be tied up here. You know, as we mentioned before, this distance across here, you know, can be 60, 80 days. So we just need to be a bit careful about things. So anyway, we'll talk more about that, but that's where we are, folks. So all looking pretty good on track. Once we get that 5 waves there, I'll be happy, because then I know where we're going to be for a while. You know, if we don't get it there and it gets more messy and it gets bearish or something, then we've got another issue to sort out at that point. Alrighty, thanks for tuning in, but I'll just go and check on silver before I go, which I did check it this morning, and I'm not really going to do or say much here because if silver gives us 5 waves up here, then I have to call a low in here, and the low would be 1 and 2, and then 1, 2, 3, 4, 5 for this one here, and then the 4th wave here, and then the 5th wave I need to drag up there. But I'm not going to move it just yet. I'm just going to allow it to be for here. I've you know, even though I didn't know what was going on in this little space here too much, I could see that it was just corrective patterns, and then it would eventually drop lower, and it's been dropping lower. We'll just see how it goes. I wouldn't trade this long unless the $23 mark here became the support. Okay, otherwise we'll just leave it here and we'll just keep an eye on it. But if that 23 becomes support, then you can go long. Okay, so we'll just keep a little bit of an eye on it. This would be the 1 and 2 and 3 and 4 and 5 copying gold, but we don't know if we're going to get that 5th wave yet here. Do you know? That's the other point with this. If we get it here as well, then we'll need to look at calling a low in this low, but otherwise, you know, we could put wave 3, 4 there and have this as 5 with that in play over here for that, but can't go there don't want to go there just yet until I've got the evidence. We can only move on that. Alrighty, I'll leave that at that. Thanks for tuning in. Cheers.